What's up, guys? Welcome to the Pip Catchers Market Review Study Sesh. It's December 28th, 2023. So, let's go over what happened on the charts today. I was anticipating us on dollar two at the beginning before pre-market, the night before. I wanted us to push through this new day opening gap and then come back down, tap into either this new day opening gap again for support, using it as support, and then also identifying this breaker block once we push past this that we could tap into as support as well. We seem to have used this as an inverse fair value gap as well here, so we would use this as support right as well to push up higher as well. So that's what I was anticipating, and the draw on liquidity was going to be consequent encroachment slash equilibrium of the external range, which would have been from this high down to this low right here. So that would be midpoint or equilibrium. That was going to be the draw on liquidity for the day on dollar index. And moving back to NASDAQ, we wanted it to be inversely translated to the downside because they both move inversely of each other. Also, we had identified right after Asian session, London session had occurred, we identified a bearish SMT happening on NQ because we did not fail, or we failed to displace above, or we had no failure of displacement, or we had no stop hunts above the buy side liquidity. So we only had that on NASDAQ, as you can see. Bearish divergence here. Also same thing on YM. Both forgot to do that on S&P and YM. So we have a miscorrelation having a bearish S&T. So that was a correlation for me that, okay, it's time for us to find a setup to go bearishly. Also, if we go to the 1 hour time frame, or is it the 4 hour? It is a 1 hour. On the 1 hour time frame, we measured out our external buy side and sell side, which was this buy side here and this sell side here. Once we had this buy side here and this sell side here, we measured out equilibrium, which is midpoint of here, having us our 1 hour breaker block right here. Okay, and this 1 hour breaker block would be also having midpoint, really close to midpoint, which would be consequent encroachment. Now, that was going to be our main target on the higher time frames, which would be equilibrium of the range, right? So equilibrium of the range. What's up? Who joined up? Oh,
Hello, can you hear me?
yeah. What's up, Jared? I'm starting.
No, man.
You can see my
Okay,
screen.
I jumped in.
You can see my screen.
Yes, I can.
Okay, bet. Okay, so again, we had bearish SMT right here. So we took out highs, took out liquidity on NASDAQ, did not take out highs on ES, and did not take out highs on YM until later on in the PM session, which is not what we wanted to see. We wanted it to be taken out during the AM session. So we have SMT here. And to have a confirmation of SMT, if we take a look on NQ right here, the candles are going to be from 8 o'clock PM to 8 o'clock AM candle. We go to dollar index. Let's measure this out, okay? So we got the 8 o'clock candle, all the way to the 8 a.m. candle. So what do we have here? This would be a confirmed lower low. On NQ, we have a confirmed higher high. On ES, we have a lower high. YM, lower high. So because of that, we have a shift in correlation between ES, YM, and NQ. NQ is the only one that had failure of displacement or a liquidity sweep. And not only did we have a liquidity sweep, we swept the higher time frames of the Asian high and London high. And what is that? Time-based liquidity. We drop back down to the lower time frames, to the 5 minute, or even the 1 minute time frame. We drop even lower to the 1 minute time frame. We have a lower time frame liquidity sweep. So we go from higher time frame sweep to lower time frame sweep. And because of that, we did not want to see the market trade above this high. If we did, we are going to start having bullish order flow, and we did not want to see that. We wanted it to stay untapped. This wanted to be the highest or the high of the day. Now, so starting off with NQ, bearish S&T, confirmed higher high, confirmed lower low on dollar index. Wanted to see it push past this new day opening gap, come back down, use the new day opening gap, the breaker block, or this inverse fair value gap as support to go higher to target equilibrium of the range. In consequent with NQ, just in a bearish sentiment. That's what we wanted to see. So our entry would have been this: higher time frame sweep, lower time frame sweep, bearish SMT, 5-minute market structure shift, displacing lower, measuring out the range from this high to this low right here, measuring that out. We want to find something in what? Premium to go lower, right? Mark out OTE. What's an OTE? This inverse fair value gap. This would be our decent fill here. So this inverse fair value gap right here would have been our first entry. Our perfect entry would be this 5-minute order block here. So this order block would have been our perfect entry here. Once we did that, what did I do to find out our actual target? We used standard deviation. Now standard deviation is not a retracement entry. It is not like the fib zone. A lot of retail traders use the fib zone incorrectly. They use the 0.618 and a bunch of other decimal points. Decimal points that matter is a 0.79, 0.705, 0.618. You want to use all three of them. They called it the golden zone. ICT has named it OTE, optimal trade entry. This has been before the golden zone. So don't think that retail traders have created this. This is ICT's. This is his concepts, okay? So I'm going to show you guys how to use standard deviation now. So your manipulation move to the upside to having an OTE retracement to continuation lower. It's from this low to this high. You're going to inverse it from this high to this low. Once you do that, and you want to use the wicks, okay? You want to use the full volume of those candles. We use standard deviations. Majority of your targets, okay, are going to be at -2 to -2.5. So down here, okay? So -2 to -2.5 would be your main target right here. Now, we did, however, come back up to tap into this fair value gap to fill it. And we did dance around pretty much all day. Only around 3:50 p.m., so right at the end of last hour macro time, that is when we tapped into our standard deviation target, which was -2 to -2.5. And like I called from this morning, that was going to be our target for the day, creating our low of the week. Or is that our low of the week? No, low of the day. My mistake. Higher time frame target was going to be consequent encroachment of this gap, somewhat close to it, / equilibrium. Standard deviation target, -2 to -2.5. So that's how our trading day would have went, basically. So we had a bearish sentiment today. You saw how everything lined up for us. You also saw how SMT worked. In time, you guys will figure out how to use this. Also, if you look at the overall picture, this is a market maker sell model. Overall picture, market maker sell model. Lower time frame. We caught the smart money reversal, basically, with a more defined 2022 model.